Yeah, there's certainly a lot coming out of this. We know JPMorgan's Investor Day, they put in line every one of their executives. And next up, we are hearing from also their investment banking executives, including Jennifer Pipsack, where we know there have been a lot of changes in management. But before we got to that point, we do know, of course, that they are increasing their net interest income guidance, expecting to bring in $91 billion of net interest income. They had expected $90 billion previously. They also lifted their expense guidance slightly as well. They also guided a lot towards the idea of increasing buybacks as well. They caution investors, of course, that right now this is a good use of capital, but for JPMorgan it could always change. But we also do know, of course, that investors do like that capital return story when it comes to JPMorgan, given that they do have more on their balance sheet than many of those banks out there, and the ability to use that firepower for capital return as well.
Normally, when we talk about Basel III, my eyes glaze over. But I think it's really interesting because Diamond has been leading the charge to kind of tamp down capital requirements. And we just heard, obviously, from Raj Cohen about the Basel III endgame. We've heard from Michael Barr about it a lot lately, too. What are they saying on the call or at the Investor Day?
The most important part of this came out of the Consumer and Community Bank from Marianne Lake, where she said, when you look to the future, these rules are so stringent, the new ones from Basel III and other rules that are being brought forward by Congress, that the free checking account idea may only be left to the affluent Americans in the future. So it might be a lot harder in the future, according to JPMorgan's own executives, for Americans to get access to financial services. They have been
By the way, checking account? Have you written a check lately? I mean, what year is it?
You still use an account, even if you're not writing an account. Although with the savings rates as they are in some of the high yield places, maybe you should be in a checking account or a savings account instead. But to your point here, yes, these accounts, though, are still very important. They are where the most transactional types of services happen. They also have been talking a lot in the past about how hedging costs and other things could become much more difficult for farmers and other types of people who matter to the real economy. So they're fighting that fight. We know other regional banks are fighting it even more. Also, there is a rule out there in the current set of rules where you can have a lot more stringent rules around past due accounts as well, and how they're treated as delinquent or not delinquent. So yes, the average American could face some severe strains with the rules as they're written now, and JPMorgan is certainly warning it.
And as Americans, we do want free checking. We do want to be able to overdraft without any penalty, and we'd like JPMorgan to buy us lunch as well, right?
Yes, yes, and yes. I can't even really argue with that, Matt.